please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. You're with us here on a fresh new edition of Midcap Radar. The market has seen a climb down, and what a climb down. I think in the last 15 minutes is when all of this has really transpired. From a high on the Nifty of 10,155, we've basically lost, 40 points, so 45 odd points in a jiffy. I mean, very, very quickly, actually. The Midcap index has lost. I mean, it was up 1%. It's barely up now. You look at the Bank Nifty. I mean, a similar kind of situation where actually the fall has been even more dramatic, so to speak. And again, we're talking about basically post-115 type of action, which is sort of contributed to all of this that we are seeing out there. We were up almost 55 odd points, and now there's about 15 points left on the markets as things stand. I could sort of go on with sectors, etc., but there's not very much to report. What was up is up a lot less, and what is down is down a little bit more. I mean, that basically explains the market right now. Advanced decline, there was hardly any gap earlier. It's now picked up. So for every I think for about 1,267 decliners on the NSE, you got about 750 advances. So there's a big gap now, which has crept up once again. With me is my colleague Samira. Samira, hi.
Hi, Prashant. Good afternoon to you. And you know what's interesting is that when we opened, we didn't mirror the fall that we had seen on Wall Street, and now as Europe opens, we're not mirroring the sort of that bit of optimism that we are seeing over there. So the markets have opened primarily higher ahead of the Fed meet that begins today. So we'll have the decision tonight. We'll have the decision from there tonight.
Ashwani is with us as always. Ashwani, thanks very much. I mean, what do you make of the dramatic climb down?
See, again, there's, possibly FIIs selling in the large banks, particularly ICICI Bank, HDFC Bank. So what looked like a pullback has, again been sold into. But I think Reliance is at lows of the day, Indian Oil. So a select group of stocks where they have holdings, they are selling into it. My sense is that the banks could have a fairly, bad next couple of hours, because they have led the market on the downside, particularly ICICI and HDFC Bank. So that way we could lose more on the banks. The Nifty, maybe, we could break morning lows. So I don't think this rally is quite sustainable once the Bank Nifty starts to break. Actually 24,100 was the previous intermediate low on the Bank Nifty, corresponding to 10,150. So that way banks are kind of opening up another leg down. Having said that, individual stocks, Canara Bank is a sell with a stop of 258, target of 242. HDFC Bank is a sell with a stop of 1850, target of 1800. And Tata Steel is a buy with a stop of 588, target of 610.
So the bounce is done. I mean, whatever short covering bounce or some bounce is done already?
I would think so. If Bank Nifty is made low of the day, that means that the bounce in the banks is over. And if it's over in the banks, sooner or later, see, last couple of days, Nifty was outperforming. Banks were kind of falling slowly. Today, banks are leading the charge because that is where the fresh breakdown has happened. And the Nifty is kind of moving slowly, so that doesn't, tell you much either way. The important point is that we can't sustain a pullback more than half a day. So that tells you a bit about the strength of the market, given that, global cues, etc., are okay.
That is true. I mean, actually, I'm looking at US futures. They're flat. The Nasdaq futures are down about 1/3%. S&P is flat. Dow is about a 6 or 7 odd point downtick coming through, and Europe doesn't look all that bad either. Ashwani, thanks very much for that. The market call, trades and view. We'll of course speak with Ashwani on the top of 2:30 once again. Samira.
All right, with that, let's actually take stock of some of the biggest voices that we had on CNBC TV 18 today. We caught up with the top doyens of the market, Sakti Siva of Credit Suisse and Abhay Laijewala of Deutsche Equities, and they concur on the valuations of the Indian market and feel that they are at a high level.
We're still underweight at this point in time. I mean, the reason for being underweight, as you know, are firstly valuations and secondly earnings revisions. So on valuations, India has been in what we call the expensive four club, which is the four most overvalued markets in the region. The premium has been above 50%. India so far this year is now the second worst performing market, and as a result the valuation premium has actually come below 50%. So we are looking at India, but it's still in our expensive four. India has had almost 3 to 4 years, consecutive years of earnings downgrades, whereas the rest of the region has seen certainly quite strong earnings upgrades last year, and even this year the revisions are flat. So India is still trailing the other markets in terms of earnings revisions.
Unlike the last 2 years, it's not as much as a top-down market. It's likely to be a far more bottom-up market. And we think that the sectors that will take leadership are going to be the ones where there is certainty to earnings growth. If your valuation reverts back to your 10-year average of roughly about 16 times or so, and if you assume earnings growth of roughly about 20%, then around 9,400 becomes a floor for the market. There is a view that India's valuation or the market valuation is probably too high and needs to come down. So in our sense, we have to really see how this interplay between fundamentals and sentiment works out. It is likely that the valuation may come down. So our expectation for this year is earnings growth of roughly about 20% and a valuation derating of 10%. This year, much more so than the last few years, it is going to be earnings growth that determines the sectors and the stock selection as well. In our view, consumer discretionary, private sector banks, and infrastructure are the three sectors that will probably take leadership.
While the market has actually been slumping a tad bit, some pockets still continuing to do well. So look at Interglobe Aviation. That stock is in fact at the high point of trade. It's added about 2% now, and you'll see a sharp spike higher as well. I wonder if the other aviation stocks as well are doing well. But let's talk about the rice companies, because the year 2018 has actually not been very good for the rice companies. So let's find out why. Rajiv Sethia, Executive Director at Chaman Lal Sethia Exports, now joins us on the telephone line. Mr. Sethia, good afternoon. Thanks very much for joining in. There are some reports which are indicating that because of a likely hike in the paddy MSP, it would make Indian non-basmati rice uncompetitive in the global market. What's your take, and have you made any representations to the government?
No. As regard MSP of the non-basmati paddy is concerned, government must raise it. They have done it rightly, because we have to pay good to our farmer. So it's our prerogative. It's up to us to realize high prices in the international market, which I feel the industry will be able to.
What can the industry absorb, Mr. Sethia? I mean, in terms of a hike?
Yes, but it's more essential, to get a good price for the farm.
No, so
look at what is happening with the tomatoes these days.
Yeah.
1 rupee. So that should be our all concern.
Yeah,
it's
absolutely.
not only the government concern; it should be the industrial concern also. And when the non-basmati kind of varieties, even Thailand can sell at a high price, why can't we do that? If our rice is good, well packed, the world is too big to...
So we're talking about, the talk is 50% over the cost of production.
Let's see what happens, how much they raise actually.
Okay. What is the demand like for non-basmati currently?
Non-basmati is selling all around it's selling. In this Sona Masuri, these varieties of South, they are also come under the non-basmati category. They sell a lot.
And what is your portion between basmati, non-basmati? What's the
No,
mix?
we as a company, we are into basmati mainly. Our 95% is in basmati,
Okay.
90 to 95%.
Right.
We are a basmati exclusive company.
Right, right. Fair enough. So, I mean, in any case, this would not make that much of a difference to you, right? I mean, this entire MSP talk.
Directly, as far as my own company is concerned, it is not going to affect me much.
Okay.
Yes, it depends how much the farmer diversifies to non-basmati varieties. That matters. That is yet to be seen.
Right.
Maybe the prices will go up.
Could you talk about your business? What volumes did you export last year? What do you plan to do? I mean, in 18, what will you do in 19? Realizations, etc. A little bit company specific.
Yeah, as regard our company is concerned, our income was around 500 crore revenue, and last year, and this year 9 month we have achieved more than 500 crore, is around 540, 550 crore. So if I look at my own trend and performance, I think we can achieve very easily around 750 crore.
750 crores in revenues this year.
Around. Yeah, this year revenue.
And same. I mean, comparison in bottom line, on bottom line.
Yeah, bottom line depends. Probably we'll achieve almost the same ratio, maybe little less, because when you expand, sometimes you sell at break even or limited profit when you expand your business. It depends.
And what kind of growth can we expect in 19, FY19?
We want to be very realistic. We don't want to rush. Around 20% I always project, not more than 20%. Because you see, what is the business? Business has to be in complete harmony as regard your financial capacity and purchase is concerned, your manufacturing is concerned, and your final sales is concerned, domestic and exports. Unless and until they are not in harmony, definitely you will get caught anywhere. So those are the business principles. We will always abide by business principle along with our growth.
All right, Mr. Sethia, thanks very much. So 20% growth in 19, 750 crores in revenues this year. That is F518. On top of that, 20% growth is what the company is talking about. I mean, till about a few years back, it had a good run. It's kind of flatlined now, I think, for a while, not done very much in terms of a stock. GSPL, let's just move on, is also sulking in trade. It's down about 6%. This after the company's plans to acquire about a 28.5% stake of Gujarat Gas from Gujarat State Petronet Corporation. We spoke with Manish Seth, CFO of GSPL. Let's quickly listen in to what he had to say.
GSPC, yes, it wants to cut down its stake in GGL, and it comes at a time when we are also enjoy a lot of synergy. So it makes a lot of sense to buy this asset at this point of time. In the short term, we'll have to take some debt. In fact, if you remember, when we took over GGL from the erstwhile BG, the same thing had played out that time also. Yes, in the short term, any buyout would require some amount of debt infusion, but given our strong balance sheet and strong cash flows, I think we can easily take that debt, and I think we, in the past also, a lot of investors have been telling us that it would make better sense if GGL were to be under the full control of GSPL. Okay. We have internal accruals, plus we'll be borrowing money in the short term, then which will be refinanced subsequently. Right now, we have hardly any debt. We have only 250 crores of debt. So after this debt will be roughly 3,500. We'll be still below 1:1 debt equity.
All right, a quick break. Be back with more in just a bit. Do stay with Midcap Radar.
Okay, 20 points on the Nifty, 10,115 is where we are at. We spoke with Lawrence Belanco of CLSA earlier, who says that the Nifty will hold on to an upside target of 12,000 in the medium term. This while the Nifty Bank can see some support coming around the 23,600 levels. Listen.
And it is disappointing to be broken at 200-day, and I'm not getting any signs of slowing downside momentum at this stage. So your next support area is basically the August 2017 and September 2017 lows around the 9,680, 9,700 area. I mean, even if we fall down to that 9.7, it is worth bearing in mind that the longer-term setup for the Nifty, and that's a longer-term breakout when we cleared the 2015 and 2016 highs in March 2017, that still gives us an ultimate upside target of 12,000. Nifty Bank slipped below its 200-day initial sell-off in January, and here we're looking at supports around the 23,600 area. So, again, a little bit more downside to it. The interesting thing on the Nifty Banks is that if we do slip below the lows that we made on the 8th of March, we will likely start to see momentum slow. Reversal. So basically my message would be any weakness toward 23,600 area would be a buying opportunity. And like we've got 12,000 as an upside target on the Nifty, we still have an upside target around 31,000 on this next Banks index.